What's up, everyone? Hope everyone is doing good. Today we have a new jam that I want to share with you guys. First of all, I want to start by making you understand the difference between XAMD and AMDX, which is continuation or reversal, accumulation, manipulation, distribution, or it's accumulation, manipulation, distribution, and continuation or reversal. So in this case, I'm going to start by explaining the AMDX, which we usually know, which is accumulation, then the price manipulates, then it distributes lower, then it creates a reversal and a continuation depending on how price is moving at a specific time. So in this case, I'll be explaining how the quarterly theory works, and how to separate the quarters in a year, because time is fractal, so we can there's there's yearly quarterly shift, there's weekly quarterly shift, there's daily quarterly shift, there's session quarterly shift. There's like more ways of trading, but price is price. Price does the same thing over and over again, either on a higher time frame, a lesser time frame, or whatever time frame. So I want to stress how much important it is for you guys to understand how to find a how to know how where the price is going, how the price delivery is moving at the specific time that you're trading. It's important for you to know what market are we in. Are we in a bullish market? Are we in a bearish market? What shift are we in? And how to get our bias of the whole month or the whole year. So I'm gonna start by explaining from January. I'm gonna this time frame I'm using is from last year. And at the same time, I'm gonna showing you the correlation between Euro USD and DXY, which USD is the one above here, and DXY is the one below here. So everything that you trade against the dollar, the price is gonna be opposite from how the price is moving. For example, here we have a bullish rally, but on the DXY we have a bullish rally, but on Euro USD we have a bearish rally. So everything that you trade against the dollar, it's gonna be an opposite of how the dollar moves. So, and you probably know that by now. So, in this video, I just want to show you how to divide the quarterly shift of the year. In this chart, as I told you, we have Euro USD, we have DXY in the bottom. We can choose any pair and which is traded against the dollar, and just try to make your charts like this. You're gonna be able to see how the price is moving on a yearly quarterly shift. So from here, we have from January to March, which is continuation, reversal, which is X. That means the price has created an XAMT on last year's price action. So the price continued from this high, from the rally high here, then it traded low, and it reversed higher and didn't take out this buy side here. So by doing that, it shows that the price is continuing. It's continuing from what it's done from the past year. The price was bearish, and it reversed in this case. Then it continued high for a couple of days, but didn't take out this high here. So now between April and June, the price started accumulating. As you can see, the price is rallying in the same direction for the whole of these 3 months. So the quarterly shift is divided into 3 months. So it's January and March, April to June, July to September, then December, October to December. So last year, April and June was an accumulation. Then July to September, it was a manipulation where the price was trading higher to taking out the buy stops here of this reversal that happened here in the beginning of the year. Then from October to December, the price distributed lower in the forex pair, which is Euro USD. And if we could check the DXY, the price rally continued higher, then it reversed lower. In this case, the price continued lower and rallied higher. So you can understand the correlation between these two pairs. So every single pair that you trade against the dollar, either you're trading stocks or trading crypto or whatever asset class you're trading, it's gonna be moving against the dollar every time. Well, not every time, but most of the time, it's gonna move against the dollar. So between April and June, which is April and June also here, the price accumulated in both pairs, which is Euro and DXY. Then July and September, as you can see on the Euro, the price was bullish, manipulating higher, and on DXY, the price was bearish and manipulating lower, taking out the sell side. In this case, it was taking out the buy side. So once the price have done manipulating lower, it continued higher, which is the distribution of the year. On the Euro USD, the price distributed lower. So we can see and understand the correlation between the two. We can basically use these pairs as a signal against the other. If we know that on DXY we have a PD array on a higher time frame, that means the price is gonna go to that D to that PD array. And that should tell you in the mind that on other asset class and other pairs, the price is gonna be bearish. Like for example, the price was bullish here and it rallied higher. That means it went a buy side PD array, and in this case, it was bearish. Let me just try to find that fair value gap that the price went to, so I can mark it and for you to understand what I'm trying to say. So here, uh, I'm using a different platform to do this. So here we have this fair value gap here. We have this fair value gap here. I'll just extend it to the left. I'm gonna extend it to the left side so we can be able to see where did the price was, where was the price running to exactly. If we can understand this price action here, it's gonna make your trading simpler. And oh, I don't know what's happening here, but now that we get it, let me just fix it, extend to right. Yeah, there it is. So yeah, as you can see, the price, the fair value gap that I showed you, the price ran to it. So it was a higher time PDR rate that the price was rallying to. And on the DXY, the price was rallying low. It didn't get to the fair value gap. But here's a sell side, there's a fair value gap that I've marked here. Let me just show you. Um, Here is a fair value gap that I marked here, which is BC, buy side imbalance, sell side inefficiency. So we see the price when it comes to euro, the price didn't get to this fair value gap, but on DXY, the price did get to that higher time frame fair value gap. So some of the traders will think that the price was going to continue lower to get to this, but this is a smart money trap where in the DXY the price ran to this PDRA. That means this one doesn't have to get to this one because DXY has already traded to that PDRA. So there's a lot of technical science in all of this. We have our mentorship where we explain further into detail on how to trade such markets, how to find good condition markets from January to December. There's always seasonal tendency where price go one direction, one bias, and it's very clear and simple. Time is fractal. Everything that you can do in a 1 minute time frame, you can also do it on a higher time frame. So I hope you like this video. If you do like this video, just hit the subscribe button so we can be able to make more of these videos. We're gonna be making our live streams. The more service we get, the more we're gonna be able to make our live stream and do sessions and also do like live executions. We have videos in our YouTube where we make our own 7-Eleven model, so you can just check that out, and subscribe and get the studies, guys. Trading is simple. You just have to have a narrative and have a basic idea of how to trade. So in our channel, we have some of the videos. You can just check on our videos, and yeah, let's meet on another video. I hope you guys have a very good one. Till we talk again. Peace.